Hey there, my name's Curtis Lucas and you're watching Empire Building. So, what a day. I really need to get into this. Obviously, this video is only about Marathon Digital Holdings plummeting 27% today on the back of a couple of pieces of news. So we're going to get into this. There's quite a few things to go over here. I know there's a lot of scared people out there, and I know I've also been critical of Marathon over the last few weeks. But we need to talk about what was announced today and the reaction to it, and whether or not this is warranted, whether or not there's something happening on a deeper level that we need to be concerned about. It's been a little bit of time since I've done a dedicated Marathon video, but there is no time like the present. So quite a day indeed. I have to admit I was preoccupied today, so for the most part I didn't even see any of this playing out. It was about a couple of hours before the market closed that I even knew any of this was happening. Needless to say, all the members on my Discord were hard at work trying to source information and make sense of what was happening. But for me personally, I wasn't able to actually sit down and start doing any research until about 10 o'clock in the evening. It's now almost midnight as I'm recording this video, so I do hope this is very much appreciated. I just thought that this was important enough that I had to address this. But before I do, I would like to ask one simple favor. The channel right now, as I'm recording this, is actually just reached 9,910 subscribers. I have only 90 subscribers remaining to break that coveted 10,000 subscriber threshold. It's taken a long time to get here, and it has been a whole lot harder than I thought it would be. So if you happen to be a returning viewer to the channel and you haven't subscribed, go ahead and hit that subscribe button. Be one of those 90. And if this is your first time visiting, then welcome. And go ahead and hit that subscribe button. I guarantee it'll be worth your while. So there it is, a 27% drop in the stock price. And of course, there are numerous articles that have been written, no doubt leading to the fear and panic that we witnessed today. Crypto mining stocks dip as SEC issues subpoena for Marathon Digital Mining Facility. Most of the articles that I found on this were pretty much the same. They go into some of the specifics on what was named inside that SEC filing, but they don't provide any context, and that's what we're going to do here. But very quickly, let's just review what these articles had to say. United States Securities and Exchange Commission, SEC, has ordered crypto mining firm Marathon Digital Holdings to produce documents and communications for one of its mining facilities in Montana. According to a Monday filing with the SEC, Marathon Digital received a subpoena regarding an investigation into possible violations of the federal securities law related to its Hardin Montana data center. In the third quarter of 2021, the SEC ordered the mining firm to produce documents and communications for the 100 megawatt facility for which it had made arrangements to develop and stock with Bitcoin miners in October 2020. Marathon Digital said it was cooperating with the SEC investigation, but did not go into details regarding the subpoena. A separate filing from October 2020 shows the company issued 6 million shares of restricted common stock in transactions exempt from registration. So I remember this agreement quite well, actually. I had done some research into this way back when, I believe this was in December last year, when I was comparing the agreements put in place between Marathon and Riot at the time. For those of you who were around back then, I was critical of the agreement in place with Riot Blockchain and the Coinmint facility in upstate New York. I found that Riot agreement to be somewhat questionable, and I was much more impressed by the agreement that Marathon had managed to put in place because it was much longer term. And there was no question as to whether or not Marathon would be able to utilize all the space available for their future growth plans. So to provide that context that we're all looking for, I had to start by going to the source. Let's look at the SEC filing where this was originally announced. So this came out in the actual quarterly filing under Part 2, Other Information, where it gets into any legal proceedings that they may be a part of. And the section in question here is under information subpoena. If you're wondering, you can read any of this stuff here, but these other couple issues here were relatively minor in my opinion, and obviously it didn't make the news, so that's not what we're here to talk about. But under here it says, on October 6, 2020, the company entered into a series of agreements with multiple parties to design and build a data center for up to 100 megawatts in Hardin, Montana. In conjunction therewith, the company filed a current report on Form 8K on October 13, 2020. The 8K discloses that, pursuant to a data facility services agreement, the company issued 6 million shares of restricted common stock in transactions exempt from registration under Section 4A2 of the Securities Act of 1993, as amended. During the quarter ended September 30th, 2021, that was just a couple of months ago, the company and certain of its executives received a subpoena to produce documents and communications concerning the Hardin, Montana data center facility described in our Form 8K dated October 13th, 2020. We understand that the SEC may be investigating whether or not there may have been any violations of the federal securities law. We are cooperating with the SEC. So, yeah, that sounds pretty much what was reported. And there's not a whole lot more context that's provided here. But we can look a little bit further than that. Like I mentioned, I had reviewed that document last December. So it was filed in October. So let's have a look at that. This section of this document describes what the agreement was that was put in place between Marathon and the other parties involved. In this case, that was Beowolf Energy, a Delaware limited liability company, and 2.1 LLC. So for context, I'm not going to read through the entire thing here. You can do that on your own. I'll leave a link for this in the description. But basically, Beowolf Energy was the energy producer. They're the owners of the power plant in Hardin, the coal-powered 105 megawatt facility. It says 100 megawatts here, but lately it had been announced that got bumped up to 105 somehow. They must have found some way of pumping out a little bit more juice than they originally anticipated. But either way, that's Beowolf Energy, and 2.1 LLC is the company that's managing, installing, and maintaining those miners. And pursuant to that agreement, further down here, Beowolf and 2P1 will provide operation and maintenance services for the facility pursuant to a data facility service agreement in exchange for an initial issuance of 3 million shares of Marathon's common stock to each Beowolf and 2P1. That's where the 6 million shares come from. And that may seem like a whole lot of money when you consider even after this fall, Mara's stock is trading at... what did we close at? $55? That's an awful lot of money. Just do the math. However, you have to remember that Mara's stock at the time, back on October 10th or whatever that was, it was trading around $2. So that would have been equivalent to only 12 million at the time. But either way, again, that's not what we're here to discuss. Again, you can go through and read through the rest of this on your own time if you feel like doing so, but basically it just goes on to show how it was being issued in phases based on certain milestones being reached as far as building those facilities out. They weren't issued all those shares up front. And that's kind of an important factor to keep in mind. So that tells us that basically there was a deal put in place where parties were agreed to accept a certain amount of share-based compensation in lieu of cash payment. And they referenced this exemption clause inside the securities law. In this case, that was section 4A2. So I thought, let's just go have a look at what that exemption is and how is it defined. A quick Google search of that rule, and we find, at least from securitieslawyer101.com, Section 4A2 is also known as the private placement exemption and is the most widely used exemption for securities offerings in the U.S. The exemption allows an issuer to raise an unlimited amount of capital in private transactions from sophisticated investors who are able to fend for themselves. Now, not to simply rely on the first hit we get, I also thought, let's go see what the SEC website has to say for itself. And in here, we can see Section 4A2 of the Securities Act exempts from registration transactions by an issuer not involving any public offering. To learn more about the section, please click the box below. I will do so. To qualify for this exemption, which is sometimes referred to as the private placement exemption, the purchasers of the securities must either have knowledge and experience in finance and business matters to be sophisticated investors, able to evaluate the risks and merits of the investment, or be able to bear the investment's economic risk, have access to the type of information normally provided in a prospectus for a registered securities offering, and agree not to sell or distribute the securities to the public. So again, we don't have any additional information here, but based off this type of information and the definition of that rule and the fact that it's being referenced suggests to me that it has something to do with that. The fact that those securities were not registered. Now, based on those rules, I would imagine that Beowolf and that other subsidiary, LP2 or whatever it was, they are probably considered sophisticated investors. So I'm guessing that box checks off just fine. And they also have access to the type of information through the prospectus. So it's possible that perhaps these other parties may have somehow sold those securities, or there may have been something that took place that led to an issue there. So the fact that Marathon has been subpoenaed for that information is not necessarily an indication on any wrongdoing on Marathon's part. They're simply cooperating with the SEC's investigation. And it wouldn't be their place to insinuate or elaborate any further than that. It's not their place to. The SEC will announce their findings in their own time. But there certainly was no problem with how Marathon set that deal up. And again, I probably should have said this at the beginning, but I am not a securities lawyer. I am not an expert in these matters. I'm just a guy on YouTube, and I'm trying to find some context here. I'm trying to gain some perspective by using all the information that we have available to us. And while it does require a little bit of speculation and reading between the lines, I'm not going to jump to wild conclusions. The issues that I've raised about Marathon in the last little while certainly have nothing to do with this. So it's still an issue that I'm weighing carefully. But in light of the stock dropping 27% over what may turn out to be just a misunderstanding, certainly provides a potential incredible buying opportunity. However, I will not ignore that Bitcoin is also showing some signs of a little bit of a reversal. We've broken the small trend line that we've been up in, but certainly the broader trend is completely intact. I've been way too busy to get into doing that video. I've been really wanting to get into it, but like I said, even this one here was a stretch for me to get out. But if you're a believer in Bitcoin, then like me, you know this rally is not over. So we definitely have plenty more room to run here. Obviously, the other issue was that Marathon announced that they were issuing convertible notes and then increased that amount. So originally it was $500 million, now it's $650 million. Honestly, to me, this is a bullish sign. This is something that public mining companies never could have gotten away with, not even a year ago. To have access to that much capital through a debt offering. The notes don't even expire until the year 2026. I mean, if you're a Bitcoin bull, who here thinks that Bitcoin is going to be worth less in 2026 than it is now? I mean, I'm sorry, I'm just not falling for that one. So one of the largest publicly traded Bitcoin mining companies with one of the highest hash rates and one of the lowest cost of electricity. This is a game changer. And it's honestly something I didn't see coming and I did not have factored in. And I'm also curious why they're the first ones to do it. But like I said, I'm no securities lawyer. I'm no expert in securities laws or even the options that are available. But when I look at this deal, the only thing I have to say for myself is if I got offered something like that, I'd take it in a heartbeat. This is exactly the same thing that Michael Saylor did to buy some of his Bitcoin. When you can take on debt in a depreciating asset and then deploy that in something that is inflation resistant, like Bitcoin or Bitcoin miners, in my opinion, even better. And the beauty of it is it doesn't even lead to dilution. I don't buy the argument that somehow Bitcoin's going to crash and they're going to have to convert all those to shares and dilute shareholders. No, that's not how this works. Unless you don't believe Bitcoin is going higher, certainly by the year 2026, then I don't see the problem. But as I mentioned before, that doesn't mean I think Marathon is completely out of the woods. For starters, none of this is going to matter to anyone that wants to write the FUD pieces. And they're coming. Oh, are they ever coming? But I do think that the investors are savvy enough at this point to see through that. At least I hope so. So I don't know what the stock is going to do over the next little while. I never have. I've never been any good at predicting any of that. But when it comes to the fundamentals, that I do understand. And for me, the only risk that I see with Marathon is its ability to deploy the miners they still have in transit and the ones that have already arrived. It's pretty clear now from Marathon's public hash rate that anybody can look at on the blockchain that the Hardin facility is at or damn near full capacity. So any further increases in hash rate has to come from the Compute North site, wherever that is. I haven't had time to review in depth the quarterly report. The SEC filing did just get issued today. So I do plan on getting a little bit further into that, and I'll share what I do find. But as it turns out, the world will keep spinning and the Bitcoin will keep coming. And as I mentioned earlier, please, if you haven't subscribed, help a brother out, hit that subscribe button. Let's get this channel over that 10,000 subscriber threshold. I know we can do it. I think we can even do it off this video. And then you'll always be able to tell yourself, I was a subscriber of Empire Building before he passed 10,000 subscribers. It's an elite club, and you'll never get another chance to be a part of it. Well, that's all for this one. Now let's get back to Empire Building.